Concerns about the stability of the US economy have forced markets to reassess forecast for a rate cut by the Fed this year. Now traders may price in even 2 rate cuts instead of one. At the same time, Donald Trump's tariff threats have heightened market anxiety. Thus, the US dollar has come under the influence of two opposing trends. However, the most important reference point for currencies remains macroeconomic statistics. You are watching Traders Calendar on the February 28th. At the end of February, the most important data for central banks traders will be released. Thus, various countries will disclose their reports on inflation and retail sales. For example, in Japan, the retail sales indicator has been showing steady growth since October last year. In February, the indicator may climb to 4%, supporting this trend. In the event of this, the country's currency will also gain value. For comparison, in Germany, retail sales may also show a rise. However, since August last year, this indicator has been highly volatile, alternating between months of acceleration and decline. According to this pattern, in February, the indicator may increase from 1.8% to 2.1%, and this could positively affect the euro. However, the very fact of a long-term instability of the indicator is a negative for the single currency. The example of China has already shown how important the real estate market is as an economic activity indicator. The UK's figure is this regard already raising concerns. After a decline to 4.1% in January, house prices may fall even deeper to 3.9% in February. In this case, pressure of the pound sterling and the euro will intensify. By the way, this Friday could be very turbulent for the euro. First, Germany will publish inflation data for its regions. And a few hours later, the country will report on its price growth as a whole. From October to December, inflation in Germany was rising. Then in January, it fell to 2.3%. If it slows more, the euro may decline against the US dollar. Amid the threat of the US tariffs, the Canadian economy may be preparing for a GDP decline. However, the fourth quarter may still show modest growth to 1.9%. In a more stable political environment, the Canadian dollar could have strengthened. However, as the tariff deadline of March 4 approaches, sentiment is deteriorating, thus boosting pressure on the Canadian dollar. At the same time, in the United States, the economic situation is already not as stable as at the beginning of the year. Inflation accelerated from 2.1% to 2.6% from September to December. However, in January, prices may cool slightly and rise only to 2.5%, and this will force the market to reconsider the Fed's monetary policy shift toward easing, lowering the dollar's value. The dollar's value also often factors in the macroeconomic statistics from individual states. For example, the Chicago Business Activity Index, after 3 months decline, already rebounded in January. If in February, the indicator also records an increase from 39.5 to 42 points, the US dollar could inch up. Also, on this day, officials of leading central banks will deliver speeches. The comments usually cause volatility in the currency market. Please note that the time of the publications is set in a GMT+3. The next video review of Traders Calendar will be released on February 28th, Friday. And now we wish you profitable trading and see you soon.